Hello and welcome to Wise Up with Open Water, your regular dose of wisdom from the open water community. I'm your host, Ken Pasternak. I'm an Open Water founding member as well as a contributor, and I'm happy to welcome Jon Staenberg to today's episode, during which we'll be talking about search funds, what they're all about, and why they might make good sense as an alternative asset class. But first, let me introduce my guest, Jon Staenberg. He's been in private equity for about 40 years. He's been a general partner in three venture funds managing over $500 million, dollars, and he's currently the managing partner of Agate Hound Fund, the world's first and only fund of funds for the search fund asset class. Agate Hound Fund number one will have some 200 small business acquisitions across 150 industries in its portfolio. And after the successful close of Fund One last year, they launched Fund Two in September of this year. So, Jon, thank you for joining. Welcome. Really glad to have you.
Really fun to be here, Ken, and thanks to the open water community. It's been fun getting to know some of the members and loving what you guys are all about.
Yeah, that's great. Thank you so much. It's a fun community, and I really appreciate your being a part of it. I'd love to start a little further back than today. I'd love to hear a little bit about your background, your journey or professional journey, how you came to discover this asset class. Maybe just, tell us a little bit of your story.
Yeah, sure. Be my pleasure. I grew up in Omaha, Nebraska. Still feel extremely strong connection to Omaha, roots there, family there, Warren Buffett's there. I go back and it's a bit of a happy place for me. And I go back every year generally for a Husker game. I'm a hardcore Husker fan. And I most often go back for the Berkshire meeting.
Oh,
I've been last 5 years and previous to that. And if the listeners haven't been, we don't know how long Warren's going to be around. Charlie's obviously gone, and it's an incredible experience. It'd be fun to get some of the members of Open Water to all go together at some point. But in any case, Warren Buffett is a hero of mine for sure, and he's also very much given me a path to thinking about my life in general, but also investments. And so I grew up in Omaha, and then I said, okay, Omaha's great, but how can I get the hell out of here and as far away as possible? So I applied to schools on the East Coast and schools on the West Coast.
hmm.
And luckily had some choices and ended up at Stanford. And that was very eye-opening in so many ways. Feel like going from Mayberry RFD to Beverly Hills in some sense. I guess I'm a Beverly Hillbilly in that sense, but without the oil. And I got there and immediately said, this is the coolest place on earth, and was inspired by the people around me. And most notably was appreciative and took advantage of the opportunities to try things.
Yeah.
And part of that is Stanford, and part of that is California. But I think from an early moment, I grew up in an entrepreneurial household. My parents had a small business, and so that's always been who I am, and it's always what I appreciate in others. And so I went to Stanford, and then I spent some time in China. Again, just the idea that I wanted to see the world a little bit and try and understand it and have a differentiated perspective. And I came back from China. It was a volunteer gig, kind of like Peace Corps. And I got into Stanford Business School. I went to Stanford Business School. And there, I didn't even know it at the time, but I was lucky enough to be there with a Warren Buffett-like character, an amazing guy who's considered the OG of search funds. His
Okay.
name is Irv Grousbeck. And for anybody listening, it'd be worth going on YouTube and finding his last lecture. It's quite good. But he is full of wisdom. He is an incredible professor, and he crushed it with search funds to the point where he ended up buying and recently sold the Boston Celtics. But more important than that piece is the number of people, students, entrepreneurs that he has mentored and coached along the way to a successful entrepreneurship journey through search funds. So, but again, I didn't know it at the time. They weren't called search funds. There were just a few students at the time who said, had taken Irv's class and were encouraged by Irv to go out and buy a business as their path to entrepreneurialism. While most of my classmates were going to go into banking or consulting, tech wasn't around then. In fact, I ended up going at Microsoft, which was nobody even knew what that was at the time. Uh, I remembered Irv throughout the years, and I came up to Seattle to work at Microsoft with the notion that I wasn't going to be at Microsoft very long. That really what I wanted to do was venture capital. I've always known that I like the art of the deal. I've always known that I am inspired by entrepreneurs, and I like the upside potential.
Hmm.
And so for me, it's a perfect fit of my interests and my, I think, hopefully my talents and my passions. And so I worked at Microsoft almost 5 years to the day. Uh, and I said, okay, now I'm going to go do what I said I was going to do, which is venture capital. And that led me on a 30-year or so uh, path, and with a front row seat to some amazing companies being formed and hopping back between the Valley and Seattle, which I still do today. And I just built an incredible community and network and got to see and be part of so many incredible, uh, game changing, world changing, life changing kinds of companies. And when I started, I like to say, I was good. I said, people, what do you do? I do venture capital. What's venture capital?
Hmm.
And that's kind of a funny comment today. Everybody knows it. And where I am with search funds is kind of the same moment
Hmm.
where people go, what's a search fund? I think I've heard of a search fund, but do you mean Google, or is it like a venture fund? And I always say, Irv, you did everything right, 100%, except you named it search funds. And that is the most confusing thing ever to the people who I try and explain what I do to. But I'm getting ahead of myself a little bit. I did venture and enjoyed the heck out of it. Uh, but after 3 decades, I decided I wasn't very good at it anymore. The game had changed. My value add was not so apparent. And so, and that combined with what I perceive as a misalignment between investor groups. And what
Mm.
do I mean by that? I think if you're an angel investor today in venture, it's extreme. The odds are against you. Not only are you taking the most risk, but you're not rewarded for that risk many, many times. And so that what I'll call and there's other examples of misalignment, but that was enough for me to say, okay, I'm not done. I'm not going to retire. Warren Buffett's working at 95. I love working. I'm not a golfer. I am a pickleballer, but I'm not a
Nice.
golfer. And so I went back to Stanford and visited Irv. This was 8 years ago. And I said, Irv, search funds, they seem to be a real thing. And before I saw him, I had gone online, and I would encourage everybody here. There's two really important and really well done papers that you can get and download from Stanford. One is called the Stanford Primer on Search Funds, and the second one is the Stanford Study on Search Funds.
Mm.
And the primer is a 10-minute read, and it takes you through the playbook. And I'll talk more about this playbook in a second. And then the Stanford Study is the definitive, comprehensive study of every search fund ever done. And that gets quoted a lot. And I think it gets quoted, unfortunately, too much. And I can explain that in a second. But the headline that everyone quotes is that over the last 40 years, search funds have averaged 35% net returns. And you're shaking your head, thank you, because that's
That's
unbelievable.
astounding.
I don't know another asset class that good. And it gets better. And by the way, Warren Buffett is 20% a year, and he's a legend,
Yeah. Yeah.
right?
Yeah.
Um, it gets better in the sense that, as far as I know, there's never been a down year per se
Hmm.
in the vintages. And I'll explain that too if you ask. And also, it's not correlated to everything else in my portfolio. So I have real estate and I have public stocks. I even have a little crypto. I have my house, uh, but those can go up, those can go down. Search funds are not correlated to that
Mm,
based on that 40-year history I just described.
yeah.
So I thought to myself, why don't I have this as a core holding in my overall portfolio? And then that started 8 years ago. That started my journey. I started going to the search fund conferences at Harvard, Stanford, Duke, Wharton, MIT, Booth, Northwestern. And I got to know all the players. I got to know what the playbook was. And I started trying to invest in it. And people were very polite, but they basically said, yeah, you're not a member of the club. And they were very nice about it, but I wasn't going to get in the best deals.
Mm,
And the best deals were the ones that were getting these returns. And so after a couple years of approaching it that way, I said, let's go around the crowd, not through the crowd. And if you can't beat them, join them. I put together this notion of a fund of funds for search. So let me stop. I just said a lot.
yeah.
Um, I will explain what search is, but do you have any questions before I do that?
Well, I mean, that's the big question mark in my head. You and Irv have
Yeah,
got me super intrigued here. And as you said, the name itself doesn't really say a lot about what it might be. So,
yeah,
yeah, please do talk a little definition here. What is a search fund? What makes it different from other asset classes?
yeah, good. So search funds, first of all, in a broad sense, is one or maybe a partner search, two people searching to buy a small business. That kind of is in the broad sense.
Okay.
What we do is a very uh, niche, defined playbook within that broader search category. And so we're focused on the invention that came out of Stanford and Harvard, whereby a student graduates from a top business school and instead of taking a job at an investment bank or a consulting firm,
Mhm.
about 1% of the students, and that's all, raise their hand and say, I'm going to go raise this pool of money enough to live on and pay myself a meager salary so that for up to 2 years, I will search to acquire and then run a mom and pop, boring North American business like a plumber, like an electrician, like a dental clinic, like a pool cleaner, et cetera, et cetera. And they've changed the name from search funds at the business schools to ETA, which I think is more descriptive, entrepreneurship through acquisition.
Okay.
So there's ways to be entrepreneurial in America. This is the way you do it by buying a company. And then you run it and you grow it to a point where private equity pays you twice or so the EBITDA multiple that you bought it for, which
Okay.
is part of the magic. But you're taking buying a small business, in some sense, anybody can do, buying the right small business at the right price and knowing how to run it, professionalize it, tech enable it to the point where you're taking it to the next level and getting it ready for the pro league, the premier league
Hmm.
is a whole other thing. And this playbook that I talk about starts with the class at the school, includes the conferences I've mentioned, but also includes this group of investors for the search fund phase, who then, who by the way, often are the teachers at the schools. So they pick some of their best students,
Yeah.
who then invest not only in the search, but in the acquisition, who then are the mentors, coaches, trainers, and teachers through exit.
Mm.
Okay. So it has this and by the way,
Hmm.
the people who are around the table for these acquisitions and searches have known each other for collectively hundreds of years. So if there's bad behavior, they're not around anymore. And if you're not adding value, you're not around anymore.
Hmm.
And you know strengths and weaknesses of the people you're working with and investing with.
Hmm.
So it actually isn't just a 32-year-old who's never run a company. It's this amazing jockey who's gritty, who's hungry, who's wickedly smart, who's passionate about this with guardrails of this incredible investor group. Does that all make sense? I just
It
said so
it
much.
does. Well, I'm curious about one thing because early on you talked about VCs and how VCs have changed over time, and you talk about angel investors and how that is the riskiest position to be in, but it often gets kind of shit elbowed out of position once the VCs take over. What you just described, these people who are, providing that year or two worth of funding and then possibly some acquisition money, it sounds like they're angel investors. Is it a different definition? Would you say it's kind of a similar role, but they're just playing it
No, I
better?
would say it's very different.
Okay.
And the reason is maybe you could say they're an angel investor in the search piece of it,
Yeah.
but they're not angel investors uh, in once the acquisition happens. And angels generally are not involved. These people are so involved.
Okay. Okay. That's
I
helpful.
mean, they are talking to them on a weekly, monthly minimum basis,
Uh-huh.
and they're truly mentoring. It's MBAs describe this as getting a PhD.
Yeah. Okay.
It is not hands off, it is hands on
Uh-huh.
in a big, big way. That's why this is super small. Our funds will never be very big because the underlying funds that we invest in are anywhere from 20 to $150 million.
Yeah.
There's no $1 billion funds in this category.
Mm-hmm.
Can't do it.
Yeah.
And the investors, while they do extremely well, are not in it for AUM. They're not in it to get the biggest fund. Part of it's hard to describe this, but there's actually a set of values in this ecosystem that are about ethics and giving back and mentoring and things like that that actually pervade this group. It's some of the nicest people in the world, some of the smartest, but also some of the nicest.
Hmm.
And it's a throwback, really, to what yesteryear, to what I saw in venture 30 years ago, to how we used to all deal with each other. It's
Yeah.
very civil. It's very nice. It's very much about let's lift all boats here.
Mm-hmm.
And so it's not angel investing in that sense.
Yeah, yeah, much more active than that. I can get that. And what's
Yeah.
also interesting in what you're describing is, I mean, people will talk about private equity these days, and yeah, I've actually been through this myself. You get a feeling that these people kind of come in, they strip a company, they might, just cut costs and be kind of sometimes ruthless about it so that they can get their multiple. And it almost doesn't matter what the business is. What I'm hearing from you here is it really does matter, and these people really do care about growing a business, and it's a small business. It's a like a mom and pop, a dentist office or whatever. Is that accurate?
That's such an important point. I can't tell you the number of times, but it's a lot. It's the majority
Hmm.
where the searcher from these schools who have been trained on how to go address, how to approach a seller, how often they get the deal, even though there's a higher bidder.
Oh,
Because if you've had a business 20, 30, 40, 50, three generation, years in a family that you put your heart and soul in, you don't just care about the financial outcome.
yeah.
You care, of course, it's important, but you also care about your legacy.
Hmm.
You care about your employees. You may even want to say, I want to mentor this young person. My kids don't want to take over, but maybe this is like a kid I never had,
Uh-huh.
right? And generally speaking, the searchers wouldn't get to this point unless they were coachable and they were sponges
Hmm.
and really interested in growing as human beings, as entrepreneurs. So that's a big piece of this. That's why the first search fund conference that I went to, I walked around with a smile the whole time. I said, these are my people.
Yeah. Well, it sounds like
I mean,
the
it's just
American dream personified in some degree, you know?
a 1,000%.
Yeah.
And I sometimes say, no matter what happens politically in this country, they're not going to screw up American small business. It is the best thing in there is no better place in the world to do small business.
Yeah. Yeah.
Basically, if you work hard and you follow the rules and you're ethical, the likelihood is you're going to win.
Yeah.
And we haven't even talked about the silver tsunami. We haven't even talked about this crazy baby boomer demographic.
Mm.
So big changes in the last generation.
Yeah.
People exiting, transitioning, and kids not wanting to take over.
Yeah.
So the tidal wave that's coming here in the next 5 to 10 years is so overwhelming. All we're trying to do is 50 or 60 acquisitions a year, and there's tens of thousands of these companies transitioning every month, every couple weeks.
Yeah.
So people are like, "Well, there's more people getting interested in this." I
Yeah.
said, "That's fine. We're a drop. We're the ocean is there, and we're just bringing a little pail to the beach. That's all we need. We
Mm.
don't need much."
Yeah.
And sure, it is true, if your listeners know about this, that with email and AI, it's getting harder to acquire because
Mm.
there's more noise.
Mm.
And the search fund world is super disciplined. So they're not just going to go buy. But having said that, people are going in eyes wide open. The search fund community is getting smarter about approaching people. They're getting smarter about the search. And by the way, this 35% was before the baby boomers and before AI is going to transform small business. So
Mm-hmm.
I'm excited that the 30, 33-year-old is going to come in and compete in Topeka or Omaha against the plumber down the street who's 65, 70, who barely uses a spreadsheet. And I mean, AI, they don't even know what AI is.
Uh-huh.
And it's going to take 5, 10 plus years before that rolls through to small business.
Uh-huh.
So, people say, what's your AI play? My AI play are search funds and small businesses.
Mm. Because the
So it's a
impact
really,
is so much. Yeah.
yeah, the impact is going to be massive on this.
Yeah.
And it's fun because of my tech background to be able to come and bring some of that knowledge and resources to the game as well.
So big question for you. You used this 35% statistic early. I shook my head, felt a little gravity defying. You've given me some ideas as to what makes that possible. You've talked about the knowledge, the smarts, the experience of the people who are sponsoring, let's call it, these investments in the first place. You talk about small businesses in general that might sell for 2x in a couple of years if they're run well. You've talked
Yeah.
about, and maybe it's also, when you invest in big business, it can only grow incrementally, right? When you invest in small business, growth has had much bigger effect. But are those the points? Are there other points that sort of contribute to this massive
Yeah.
return?
Yeah. Yeah. Great, great question. One thing I say to people is, venture was always about trying to get to the unicorn status by being 100%, meaning you
Yeah.
just got to crush it in every way, right? What we're trying to do here, because we're already buying profitable small businesses, we're not worried about next rounds. We're not worried about valuations. We figured that out. What we're trying to do is kind of go from, and I'm making this up, but you'll get the point, 30% to 40%,
Yeah.
which is a lot easier, right, than trying to get to the 100% from an idea. Much easier. Still hard, but much easier. So that's one way to think about it. The second way to think about it is because private equity doesn't want to play here,
Hmm.
we're buying at 4x. We're buying $2 to $5 million EBITDA companies on average at about 4.5x multiple on that EBITDA. We sell 9 to 12x. So that's
Uh-huh.
value creation right there. The next thing to think about is we put debt on less than the financial engineering orientation of private equity, but enough that you juice returns because if you can outperform the cost of debt,
Hmm.
right,
Yeah.
you're going to
Yeah.
get some upside. The other thing we do is we keep the seller in, and they have often a seller note alignment. They often have earnouts on performance alignment. They often stay in on the mentoring piece alignment. And so that also helps.
Hmm.
And so I think it's a combination of the smarts, of the financial, a little bit of debt on the multiple.
Hmm.
All of those things together are what creates this.
Yeah.
And quite frankly, uh, this community, this
Yeah.
community that really has, if you think about it, they've done 800 deals together in some sense. So their pattern recognition is pretty amazing.
Yeah.
And by the way, it's the same people. So if you look at private equity over the last 40 years, the top 10 private equity firms are completely different today than they were
Yeah.
because there's ups and there's downs. That's not true for search.
Yeah. I have a question because what I love about this, I like the scale of it. It feels approachable. I like
Yeah.
the keep the founder around idea versus just get rid of this guy or woman. I like the fact that this is so it feels real. It feels authentic, right? So you've got Agate Hound Fund, which you described as a fund of funds, which, the other thing about real is, we all remember 2010, I think it was, when people were selling these imaginary notes on real estate, right? And it all blew up and everybody was holding these imaginary notes and nothing
Yeah.
existed, right? These are real businesses that do real
Right.
real commerce and have real people running them, et cetera. So when you get to the scale of a fund of funds, when you've got 200 companies and 150 industries, does that get diluted in any way or does it stay real?
Oh, I mean, I don't. No, it's as real as it gets
Okay.
because it's the same playbook. It's the same type of companies. It's the same people
Yeah.
underlying it all.
Uh-huh.
What it does do is it creates a broad, diversified portfolio. I mean, you should sleep really well at night knowing that you're in something like this because of the characteristics. And of course, 40 years of data is not, it's not like crypto where you go, okay, well, it's been incredible for a short time,
Right.
or some other tulip craze. This has been around. This is
Right.
authentic. These are real companies. We're going to need plumbers 20 years from today,
Right.
right? We're going to need HVAC. We're going to need med spas and dental clinics. We're going to need all these things.
Hmm.
So it's as real as it gets. It's just we're creating this broad. First of all, we're creating access because I
Hmm.
explained to you I couldn't even get in, and then we're creating this broad, diversified portfolio. And and I still think because our starting point is so good that we still end up outperforming most things.
Yeah.
And who knows what the next couple years is going to bring?
Yeah.
I
Well,
mean, go
that's what I
ahead.
was going to ask next, actually, John, which was you mentioned the silver tsunami as one dynamic. You mentioned AI, which is changing everything in many ways. So yeah, what does that future start to look like 4 or 5, maybe even 10 years out? Where is this all going? What are the possibilities? What are the risks?
Yeah, I think so. It's a part of my excitement about this is that I'm coming in at the moment that it felt like it with venture capital.
Uh-huh.
I'm coming in at the moment where people have discovered the asset class on a broad basis.
Hmm.
Again, what we do is narrow, and not very many people could ever do this just by
Hmm.
definition.
Yeah.
But more and more people are looking at buying companies. But we're coming in at a moment when people are starting to innovate on the models, just
Okay.
like they did in venture capital.
Yeah.
Some people are going early, some people are going later, some people are saying, let's get mid-career managers, let's get senior managers, let's do incubators, let's get accelerators, let's do Europe. Let's all of this is happening. And it's really a great moment. Like I am sure you asked the question I am sure in 5 years we
Hmm.
will have modified our approach, but we will always be core ETA from the best business schools.
Yeah. Yeah. That's great. Your passion just comes through here so strongly. It's really great to have this conversation with you. And unfortunately, we're running a little short on time, but I'm curious, if you could kind of sum up in a couple of sentences or a couple bullet points for our audience, what you'd like them to take away from this discussion we're having here.
Yeah, so I hope everyone reads. If you don't know about search funds, read about them at the Stanford on the Stanford Primer and Study. I hope that you have discovered here maybe an alternative investment class you didn't know about, right? That is pretty exciting, and right now I feel like is the moment. And I think if anybody wants to reach out to me and talk about this, agatehound.fund is the website. Jon at Staenberg.com is an easy way to reach me. It's really uh, the community. I love talking about this, as you pointed out. I'm very passionate about it. I put on dinners, I put on Zoom calls, I've got podcasts. I think this is the most exciting asset class in the world today. And I think our approach makes a ton of sense. And I love talking to people about it. So feel free, anyone, to reach out to me on this.
That's great. Thank you, John. And just to clarify, your email is jon at staenberg.com.
Perfect. And
Correct?
agatehound.fund. Yes, that's correct.
Agatehound.fund. Agate like the gem, hound like the beagle.
Perfect.
Awesome. Well, listen, what can the community do for you, John? Now that you've shared your wisdom, your time with us?
Thanks. The community, I would love if anyone knows anyone that might find this to be an interesting investment class. Please share this with them. Please get in touch with me. I put on dinners in San Francisco, by the way, for investors and for founders. What I want to give to the community is anybody who wants to join us. They're amazing and fun. I've done 1,000 such dinners, and
Wow.
I do them almost every month in San Francisco. And if you're ever in Seattle, where I live, please reach out to me directly. And I just got back from Europe. I'm actually getting a golden visa in Portugal, and we're starting to look at Europe in the search fund space as well. So there's a bunch of topics there that I'd love to talk to folks about.
Wonderful. We didn't even get the chance to talk about your vineyard, John.
That's true. Hand of God in Mendoza, Argentina. If you're going, good point. If anybody wants 50% off amazingly good wine, reach out to me. I sold it this year.
Oh,
It's in
congratulations.
Mendoza. If you're going to Argentina, I've got tips and tricks. And we've got 40 cases left. Or come to my dinners and drink some with me, even better.
That's wonderful, John. Thank you so much. This has been fun, informative, something I knew nothing about before, and I look forward to learning more.
Thank you, my friend.
All right.